there's a running tap somewhere. There's a tap sale on the IFB 1 2023 17 paper. If you remember, this is the paper that we had settled for. We had just settled on 19th of this month, and it has been reopened again. So in this video, I'm going to take you through a tap sale, what a tap sale is, and as we discuss the tap sale, we are going to go through this bond which has been reopened or whose bidding has been extended. And then I'll let you understand the difference between a tap sale and a reopened paper. Now, every month, CBK issues Treasury bonds, either Treasury bonds or an IFB. All right? Sometimes this issue or this paper being whatever was being sold, that specific contract, Treasury bond contract which was being sold at that particular time, can be reopened again. Reopened means it can be sold again at the same terms and conditions. In other words, CBK can come to borrow from the public. Remember, bonds are issued by borrowers. In this case, CBK is the borrower. So CBK can come to borrow from the public for with a specific maturity date, a specific coupon rate, and coupons be paid within specific months. And then they receive the bids, they announce the results, and then we pay the monies, or we settle, or we remit our payments to CBK, our investment amounts, and then that issue is closed. 1 week or a few days later, CBK can decide like, I need more money from the public. And then they open a tap sale. They open a tap sale, meaning they can reopen the same paper which we have just bid for and resell it to us. I mean, continue selling it to us. Okay? I had told you before, after bidding is closed, you can always buy those papers from the secondary market, meaning you can go and buy it from maybe Absa Bank or from KCB or from any other investor, or you can go and buy it from Berlin. If Berlin bought a certain amount and I want to offload some of those papers, some of those amounts, I want to get back my investment. So you can buy those papers which were issued previously in the secondary market. In the case of a tap sale, you are going back to buy it from the primary market. The primary market here being CBK, the issuer of that bond. The issuer of our Treasury bonds is CBK. So in the case of a tap sale, you are going back to CBK again, the primary market, to buy this paper which was previously auctioned. Now, a reopened paper, remember these papers were reopened. At the point when you were buying them, on 19th August, they were reopened papers. Reopened papers a tap sale is a reopened paper, but a reopened paper is not necessarily a tap sale. A reopened paper is a paper which had been issued earlier. Now, this is a perfect example. This IFB 2023-17 is a reopened paper because it was first issued in March 2023. So whenever it's sold, it means it is being reopened. It's being reopened. Now, this month it was reopened and we bought. And then after closure, there was a tap sale. CBK has extended that bidding period. Yeah? So that's the difference between a reopened paper and a tap sale. All tap sales are reopened papers, but not all reopened papers are tap sales. I hope that is clear. Why would CBK decide to offer a tap sale? Before I tell you, have you subscribed to this channel? Please press the subscribe button and click on the notification bell. I will know when you don't click on the notification bell. Now, CBK may reopen a tap sale if it wants to get more money. This specific paper, which has been reopened, or where a tap sale has been issued, was undersubscribed for in the previous auction. two papers were on auction. There was IFB 1 2023 6.5, which had a coupon rate of 17.9327%. And there was IFB 1 2023/17, which has been reopened for the tap sale, and this carried a coupon rate of 14.399%. So there was an oversubscription on the high coupon paper, the 6.5 paper, which had a higher coupon rate, and an undersubscription in the 14% paper. What does that tell you as an investor? Always look for high rates. Always look for high interest rates, high coupon rates. That's what the investors have done. And this includes the institutional investors. They went for the high coupon rate paper. And the other one was undersubscribed. Now, CBK, in its own wisdom, they knew if they reopen both papers, we will still go back for the high coupon paper and undersubscribe for this one. And then that will put them at risk of having a huge amount to pay us at a high interest rate. So they chose to open a tap sale for the lower coupon paper. Now, these two papers also have different maturity dates. One had a period of 6.5. The other one had a period of 17 years. So by reopening the longer paper, CBK is essentially laddering its repayment. So they don't have a huge amount falling due at the same time. Number one. Number two, even their coupon payment periods is different. One has May and November, another one has March and September. So when they reopen the other one, they'll have huge amount of coupons to pay in May and November. So what will they rather do? They'll rather open the other one, where now when we buy the other paper, the coupons will be spread out between May, March, September and November. That's a wise decision. Is there a difference in buying this paper now or having bought it on 19th August? The terms of these papers do not change. Whenever a paper is reopened or whenever there's a tap sale, you are buying this paper at the terms on which it was first issued at, except for the settlement amount. The maturity date will remain the same. The coupon will remain the same. The coupon payment dates will remain the same. The redemption structure will also remain the same. When this paper was last issued last year, it had a maturity date of February 2040. And its redemption structure was that 50% was to be paid in February 2033. So that will remain the same. And then the balance of that amount of your investment will be paid at maturity. So what does that redemption structure mean? The limit is any amounts up to 1 million per CDS account at amortization will be redeemed in full. Now, if you invest 500,000 in this paper, if you're investing it now, if you had invested it last year, or if you bought it on 19th August, come February 2033, you will get back your entire 500,000 shillings. If you invested 3 million in this paper, let me paraphrase. If you had invested 1 million in this paper last year, and then now you invest 2 million in this same paper, that means that your portfolio on this paper is how much? 3 million shillings. And so come 2033, CBK will pay you back 1 million. Why? Because your investment amount in this specific paper cumulatively is 3 million. And in 2033, any amounts below 1 million will be paid out. That's the redemption structure. And then the amounts above 1 million, you will receive 50%. So come 2033, the year 2033, CBK will pay you 1.5 million of this paper. That is assuming you had bought 1 million last year and you're buying 2 million now. If you had bought 30 million last year and you're not buying anything now, come the redemption time, 2033 Feb, CBK will pay you 15 million. That is 50% of your investment amount. So redemption structure basically means redemption is a recovery of your principal. How much will CBK pay you by when? For this paper, like we have said, come February next 2033, any amounts in excess of 1 million, you will receive a half of it. And if your sum of investment on this specific paper is 1 million and less, you'll receive back everything. Okay? Redemption structure. Why would you want to buy this paper? Is there a reason for you to buy this paper? Yes and no. Number one, the tenor for this is longer. So if you want a long-term investment, this is a good paper to take. Why? Because regardless of how much you'll put, you will get back your money in 2033, and the balance if you invest in excess of 1 million in 2040. However, let me give a disclaimer. You can always sell these papers. You can always recover your money from the secondary market. You can always go to the secondary market and source for a buyer. Or, as a last resort, you can always go back to CBK and CBK will pay you back your money. But you'll be penalized for that because CBK is a last resort. You can discount it back to CBK and CBK will pay your money, but I think they'll take about 3% above the market yield. I'll be doing another video to explain to you how market yield comes into play whenever you are buying bonds. For the interest of time, it carries with it a market yield of 17.7279%. And it has an adjusted average price of 91.0149% for every 100 shillings. What does that mean? It means that if you are to invest 100,000 shillings, if you put a bid for 100,000 shillings, you are going to remit to CBK 91,014 shillings. So is this paper being sold at a discount, or is it being sold at par? Or is it being sold at a premium? Let me know your answers in the comment section. Is this paper, when you invest 100,000 shillings, you will remit to CBK 91,049 shillings. So is this paper being sold at par? Is it being sold at a discount? Or is it being sold at a premium? Give me your answers in the comment section. If you invest 10,000 shillings, how much will you be sending to CBK? If you are to invest 10 million shillings, how much will you be sending to CBK? Let me know your answer in the comment section below. If you are to invest 10 million shillings, if you are to put a bid of 10 million shillings, how much will you be sending to CBK if its adjusted average price is 91.0149 shillings? And if you are to invest 50,000 shillings, if you are to put a bid of 50,000 shillings on this paper, how much will you be remitting to CBK? Now, regardless of the amount you'll be remitting to CBK, when you're being paid coupon, CBK will work out the coupon on your bidded amount, on your order amount. Now, in our example of 100,000 shillings, if you were to put a bid of 100,000 shillings, like I have told you, you will remit to CBK 91,014 shillings. However, come November, CBK will pay you coupon or interest on the 100,000 shillings, the high amount, and not on the 91,000 shillings, because your investment value is 100,000 shillings. Do let me know in the comment section if you have any question. Also, please press the subscribe button, do like the video, and share it out. See you in the next video.